Hey everyone, in recent weeks, both Alphabet and Meta Platforms, the two advertising giants in the US, reported earnings, whereas Meta Platforms stock surged following its earnings results. Alphabet fell. And so a lot of investors are asking what's going on? Why did Alphabet stock fall when Meta surged? So in this video, I'm going to go through the latest quarterly conference call and highlight what's going on with Alphabet stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Artificial intelligence is obviously a big area of focus for Alphabet. It's been criticized for getting behind in the game, Microsoft taking the leadership position when Alphabet has been investing in this area for quite some time now. So how did they fall behind and why are they not catching up? Well, we get a lot of explainer here in this video, in this conference call from Alphabet management describing what they're focused on, where their areas are in investment, and what products they have coming out in AI. So first of all, in search, they're applying artificial intelligence in the search engine and they're applying generative AI to search, which means they're able to serve a wider range of information needs and answer new types of questions, including those that benefit from multiple perspectives. Now, customers have said they've only noticed incremental improvements in Google search, whereas Microsoft and its investments in OpenAI and ChatGPT have made Microsoft's search engine much more better, not just incrementally better. And so there's been risks that could some search queries go to ChatGPT instead of Google search? That remains a risk, and that remains something that Google investors, including myself, I am a Google shareholder, are concerned about. So management saying, in addition to search, we're also seeing a lot of interest in our AI-powered solutions for advertisers. That includes our new conversational experience that uses Gemini to accelerate the creation of search campaigns. And this is a critical topic. Some companies focus on the product, the service, without really thinking about how to monetize that product or service. Can it be monetized? How will it be monetized? And you've really got to approach it holistically. You as a business, you don't want to just focus on a product or service, because then you're going to end up delivering something that you can't really monetize, and you're going to achieve a great product or a great service perhaps, but then generate significant losses on the bottom line and not being able to realize your vision. So Alphabet, cognizant of that fact, is focusing not only on the service side of the AI for customers, but also on the business side. Where is it going to sell to? Who are going to pay for these? And creating these types of AI for search campaigns makes it less costly for businesses to start a campaign. So if you're a small business and you're looking to launch an advertising campaign, by having AI tools available, it makes the cost of that campaign lower because it makes it easier to implement and therefore take less time. And of course, if you're saving small business owners time, you're basically affording them more money, because time is money, of course, if you're a small business owner. And that's a big key. Although we have yet to see a big jump in revenue here, we did see an incremental increase in the search engine revenue for Alphabet. Revenue did increase meaningfully in the most recent quarter compared to the growth rate in the same quarter the prior year, although not a meaningful jump just yet for Alphabet. Subscriptions are growing to a big business for Alphabet, 15 billion business in annually. YouTube is the key driver of their subscription revenue. And you're probably watching this video on YouTube. My videos are available on multiple services, including YouTube, and you might be watching it in Yahoo Finance or on the Motley Fool. But I think the YouTube subscription is a great value. I think YouTube overall is a great value where people can find great content from myriad creators to fit what they're looking for, the type of content that they're looking for on demand. And if you subscribe to YouTube Premium, where you get to have YouTube without ads, I think it's a great value at, I think it's, I subscribe to it. I think it's $10 or $12 per month. And I think it's a great value when I look across the board in all of the streaming services that are available. YouTube, I feel like, provides the most content for the most people that fits what they're looking for. Whereas other streaming services, you know, they have a lot of content, but I find very few of those content pieces watchable. I rarely find something that I find enticing on many of the streaming services that are out there, but YouTube has, several great content creators, especially for investing. I think YouTube has excellent content creators. I don't know. I mean, comparatively speaking, if you look at CNBC, which charges for the pro version over $30 per month, and what you're getting there versus what you can get on YouTube for a lot less if you subscribe to it, I think is a great value. And I'm not surprised to see the revenue increasing from this category. Search, YouTube, and cloud are all supported by their state of the art compute infrastructure. This infrastructure is also the key to realizing their big AI ambitions. And over the years, Alphabet has built an excellent compute infrastructure. It's differentiated. It's probably best in class here in terms of the size and scale and effectiveness of the compute capabilities. And now they're benefiting from that and seeing that drive growth. It'll be difficult for anyone else not the size and scale of Alphabet. Of course, there are some that are this big, like Microsoft and Amazon and Meta platforms, but it'll be very difficult for smaller companies to come up and match this type of scale in terms of compute. And you've heard of their talk about their efforts to durably re-engineer their cost base and improve their velocity and efficiency, and that work continues. I've criticized Alphabet for ineffectively cutting costs. They've spent billions of dollars on severance and restructuring expense as they've tried to cut their cost. I think others like Meta Platforms and Amazon have done a better job in cutting costs. Alphabet has been, out of the big ones, the worst in the three. I would hope they would do a better job going forward. I like that they're cutting costs because I felt that their costs were bloated a bit, comparatively speaking. So it's good that they're doing this, but I would hope that they do it more effectively going forward. They're also improving their machine utilization, building on years of experience driving efficiencies in their infrastructure and operations, and their supplier efficiency efforts and automation of certain processes have made major improvements in areas like procurement, that was hard to say, achieving significant savings. And we're starting to see Alphabet's profitability, profit margins expand, and investors, that's one of the reasons why I'm rating Alphabet stock. If you don't already know, I've rated Alphabet stock as my top stock to buy for 2024. I did this rating early in the year. I think the video came out December 31st or January 1st, around that time, where I recommended Alphabet as my top stocks to buy. And it was a two-sided recommendation where I felt their revenue was going to accelerate, although not up to the 20% growth rates that the company was achieving several years ago. Still, I thought double-digit revenue growth was achievable for Alphabet. And I also felt there was room for improvement on the cost side. I felt they could leverage their cost while they grew revenue, keep costs under control, expand profit margins in that way. And so far, they have demonstrated that in these results. We saw that where revenue increased, cost remained under control, and profit margins did expand. Although investors didn't agree and weren't as enthusiastic about Alphabet's results. I mentioned at the beginning of the video, Alphabet's stock price fell even though Meta Platforms surged. Part of the reason was that going into the earnings results, Alphabet stock was already up 10%, so the expectations were already strong for Alphabet. It was going up against a weaker comparison in the same quarter the prior year. And then, like I talked about, the ineffective or inefficient cost cutting that led to billions of dollars in restructuring expense, I don't think pleased investors. While Meta Platforms cost cut employment down 22%, fewer employees year over year, and relatively speaking, they didn't spend as much on restructuring, on implementing those cost cuts. So those were the factors that I think led to the difference in post earnings stock price movement for Alphabet and Meta platforms. Still, I recommend Alphabet stock. I still think I still rank it as my top stock to buy in 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.